This is a little bit profile about me, and now coming to our own topic, that is GST law. So what is GST law? What are the statutory provisions that we are going to cover up in the syllabus? So here is CGST and IGST. This is Central Goods and Services Tax and Integrated Goods and Services Tax. These are governed by two different acts. CGST is governed by CGST Act, and there are more than 175 sections. There are 3 schedules, and these 175 sections are divided into 21 chapters. IGST Act, 25 sections and 9 chapters. With CGST, there are rules also. There are 162 rules, and with IGST, 9 rules. With CGST, lots of notifications are also there. In the IGST, less notifications, and some notifications exclusively for IGST are relevant, but otherwise, most of the notifications are under CGST. So what is the main criteria? What is the main subject to be studied for GST? That is CGST. IGST will come simultaneously, and all this, whatever is written on here in GST law, everything we are going to cover up in our regular lectures in the syllabus. And not only covering the law, we will also have lots of question answers. So for covering GST alone, that is CGST and IGST, we require more than 30 lectures. So 30 is minimum, more lectures may be required. So full screen.
Sir,
yeah, tell me.
Sir, thank you, sir.
Okay. So this is what we are going to cover up. Entire law. SGST, that is the State Goods and Services Tax, that is not a part of syllabus of any of the professional exam, because state laws are not there in the central in the exams. So that is the state law. So we are concerned with the central, rather the central law than CGST. This is not central. This is then IGST. So this we are going to cover up in the lectures, and 30 plus lectures are needed. And then in Customs Act, Customs law, we are supposed to read Customs Act in 1962, and this is having 161 sections, and the most relevant portion is up to section 90, and that is the entire act is divided into 17 chapters. But for any exam, whether it is CA final or it is CS professional, relevant provisions mainly are up to section 90, because that takes care of assessment, that takes care of valuation, that takes care of duty drawback, that talks about baggage. So all important provisions on which questions can be framed, those are up to section 90. After section 90 begins inspection, inquiry, arrest, seizure, penalty, procedure, appeal, etc. And those are not the areas, or those are not the provisions on which questions are mainly framed in the exam. So there can be questions after section 90 also, but chances are very, very less, because practical question can be only from either baggage or duty drawback or valuation. There is no topic after section 90 on which a practical question can be framed. Assessment provisions, those are also before section 90. Warehousing provision, those are also before section 90. So all important provisions are up to section 90. After that, the provisions are made for different purpose, not for the purpose of this exam. Then there are valuation rules, 12 rules are there. Then baggage rules, 8 rules are there. Duty drawback rules are 15 rules. And customs law requires 10 plus lectures, means minimum 10 lectures. It may require 15 lectures also, depending upon how much interaction goes on. And if you have more practical questions to be done in the class, then certainly number of lectures increase. Then in CA final, there is another chapter, foreign trade policy. This is not the part for CS students. So that will require 4 additional lectures. And that foreign trade policy carries a weightage of 5 marks in the exam. So these are laws which we are going to cover up in this syllabus. So GST law, CGST Act and rules, IGST Act and rules, notifications, then question answers, and same way we are going to cover up the customs law also. Customs Act 1962, that is then the valuation rules, baggage rules, duty drawback rules, and then foreign trade policy, that is also referred as the EXIM policy, export import policy. Lecture schedule will be Monday to Friday, 5 to 7. Extra lectures, those will be need-based, and video recording, as you already know, that every lecture is being recorded online, and recording will be made available for your viewing purpose up to 15th of January. So that can be seen. So any question till now?
No, sir.
Okay, so we get ahead. Sorry. Reference material that we will be using, relevant acts which are amended up to date, relevant rules again amended up to date, relevant notifications amended up to date, then institute material. This institute, that depending whether it is CS or CS, whatever material is provided by the institute, that also will refer. Act, rules and notifications, those will be provided by me in the soft copy. So if you wish, you can take a printout. If you wish to read on the laptop, then you already have a soft copy, don't need to get a printout. I'll give you amended one, and that we will be referring in our lecture on day-to-day basis. And no need to refer any amendment after going through the material, because whatever I'll give you, that is already amended. So up to December exam, amendments which are possible up to 30th June, that can be asked, and those are already covered in my material. So there are no need to refer any amendment portion later on, because this is another pain area that toward the, as when the examination are reaching or approaching, you are more concerned about the latest amendments. So that will not be there. Everything will already be as per amended provisions. Now, topic-wide weightage for CS professional. Total marks allotted for the indirect tax is 70 marks. Out of that, GST is approximately 50 and custom is approximately 20, because the institute has not given bifurcation how much is for the GST and how much is for the customs. So that's why I have given approximate depending upon the past examination paper that I have seen. But for CA final, it is predetermined that GST will be for 75 marks and custom FTP will be for 25 in together. Out of that also, custom varies from 18 to 22 marks and FTP varies from 3 to 8 marks. So that is the bifurcation. So you can plan which area to focus on. And I'm going to give you more specific things where you should be focusing. And whatever questions are there in the exam, there are directly law-based questions which are up to 50%. So if you have read only law, if you have not understood practical application, if you cannot answer practical questions, still you can pass, because up to 50% directly there are law-based questions. Then situational questions including case laws. So as far as GST is concerned, none of the case laws are very, very relevant for exam, but under customs, case laws are there, but very few. So situational questions and case law-based question can be up to 25%, and practical questions are bound to be there, which are at least 25%. So which are the areas where from questions can come, that I'm going to tell you now. Important topics. You can take a note of this. What are the important topics? Under GST, if you cover up these important topics, same in the customs, your burden is substantially reduced. Passing the exam can be substantially reduced. So passing the exam, that is peanuts. The question is scoring. Can you score 70 plus marks in the paper? Then that makes a difference. And my purpose of being here and your purpose of being here will be served only if you are planning for 70 plus. If you're planning to pass, you can pass only by covering these topics. So under GST, supply, what is called supply and the relevant schedules of the GST, CGST Act, there are 3 schedules which you have to cover up. Then exemptions, all practical questions under GST are bound to be having concern with the exemption, then valuation, input tax credit, that is again one area where from question is bound to be there in the exam, then payment of taxes, refunds, returns and assessment. These are important areas as far as GST is concerned. Then in customs, we have important provisions which are in assessment and duties. Assessment provisions start from section 12 and those go up to section 26. Then duties are covered under the Custom Tariff Act. Those are not under the Customs Act. Duties are under the Customs Tariff Act. Then baggage provisions. Baggage provisions are there from section 77 to section 81. Then valuation, for the purpose of Act, there is only one section, that is section 14, but valuation rules are there, and without rules, you cannot study. Duty drawback, that starts from section 74, goes up to section 77. That is why, that is another important area where from practical questions can be framed. So whatever said and done, ultimately your entire structure is going to be based on this, because these are the areas where from theory and practical and law based all type of question can be framed. So that's why I said these are important areas for the purpose of preparation for exam. Now we begin with this formally about the GST, but before I proceed, if you have any question, we can discuss. Whatever I have explained till now, I've just explained the coverage. Anything to talk about? Can you hear me?
Yes, sir.
As of no, no, sir.
Okay. So we will go ahead with the discussion. So what is a GST? GST is a tax levied and collected on interstate and intrastate supply of taxable goods and services by a taxable person. So this is one sentence I have made, and I have divided that into points. So every line requires explanation. In general, you can read it as one line. The GST is a tax levied and collected on interstate and intrastate supply of taxable goods and services by a taxable person. First is when I say tax. So tax requires authority of the Constitution. Without constitutional authority, no tax can be levied and collected. So where from comes the authority? This is here, constitutional authority for GST. Article 265 says, no tax unless authorized by law. Whatever be the tax, there has to be a supporting law for that. And so if there is a no law, tax cannot be collected. Then Schedule 7 of the Constitution, that says authorizes the state government to levy GST. Then Article 269A, that is inserted by the 101st Constitutional Amendment, authorizes the government to levy and collect tax on interstate supplies. So these are the provisions under the Constitution of India because of which GST becomes valid. So without proper authorization of law, the first point says GST is a tax, and Article 265 is saying there cannot be any tax unless authorized by law. So where are the authorization? So authorization is here under Article 265 plus Schedule 7 plus Article 269A. All these three things wrapped together, it becomes a valid that government can collect tax on GST. Then levy and collection. So levy and collection has to be authorized by the law. So under which provisions this is authorized? So levy and collection of GST under section 9 of the CGST Act and section 5 of the IGST Act. This is authorized to collect the tax. So charging sections, the tax is charged under a specific section of the Act. As far as CGST Act is concerned, that is covered under section 9 of the CGST Act, and the same provisions are covered under section 5 of the IGST Act. So here I'm not going into the sections at this point of time. Later on I will give you a reference, but here you just have to understand that as per Article 265 of the Constitution, first point, Article 265, tax cannot be levied unless authorized by law. So law is authorized. So Constitution is authorizing, then further it is authorized by the Act, that is CGST Act and IGST Act. So as far as CGST is concerned, it is authorized under section 9, and IGST is concerned, it is authorized under section 5 of the IGST Act. Then GST is of two types of supply, that is intrastate and interstate supplies. Only for reference, this chart you can see that on intrastate supply, that is within the same state. So where the location of the supplier and the place of supply happen to be in the same state, that is called intrastate supply. Later on, that is in writing, here only for reference. So what is called intrastate supply? So in nutshell, you can say within the same state. What is within the same state? The place of supplier, location of supplier, and the place of supply. If those happen to be within the same state or union territory, then that will be referred as intrastate supply. And if there is an intrastate supply, two tax will be charged, that is CGST and SGST. Both amounts are exactly equal. And if it is an interstate supply prima facie means the location of supplier and the place of supply are in two different states, or two union territories, or state plus union territory. That is called interstate supply. Import export is also covered in the definition of interstate supply. So we will not have a specific provision for import export. That is also treated as a interstate supply for the purpose of GST, and tax is chargeable on them on import export also under section 5 of the IGST Act. And only IGST will be chargeable there on. No CGST, no SGST, only IGST. So IGST amount is equal to aggregate of CGST and SGST. Amount of IGST is equal to aggregate of CGST and SGST. And IGST is collected by central government, and half of that amount is shared by the central government with the state government, which is the recipient state. So central government shares the revenue with the recipient state. So 50% of the amount collected by the government directly goes to the state government, and that is the recipient. Recipient means in which state goods or services are being received. So central government will transfer that money. So instead of the supplier paying the money to the state government of another state government, the job is done by the central government. So central government says, if it is the interstate supply, pay the whole tax to us, then we will retain 50% and balance 50% we will transfer to the state government, that is the recipient government. So that is levy and collection. This is authorized under two different sections and two different laws. Number one, under section 9 of the CGST Act and under section 5 of the IGST Act, levy and collection is authorized. So there is a authorization coming from the Constitution. There is an authorization under the Act also, and these two sections will be referred as charging sections for the purpose of GST. Which are charging sections? Section 9 of the CGST and section 5 of the IGST. These are referred as charging sections. Then, here we have detailed explanation what is called interstate supply. Why we are talking about this? I'll take you back here. Point number 3 says interstate and intrastate supply. Interstate supply is defined under section 7 of IGST Act. Interstate supply is defined under section 8 of the IGST Act. Note it carefully. Interstate supply defined under section 7 of IGST Act. Intrastate supply defined under section 8 of the IGST Act. So here we will go to, this is here. So what is called interstate supply? Interstate supply, as per section 7 of the IGST Act, this is supply of goods or services where location of the supplier and the place of supply are in two different states or two different union territories or a state and union territory, then it should be treated as a supply in the course of interstate trade or commerce. So location of supplier is in one state or union territory, and the place where supply is being sent, that is destination, that happens to be in another state or union territory, then this will be referred as interstate supply. Quite possible the supplier and recipient both are in the same state, both are in the same city, both are in the same building, but where the delivery is being given, what is the destination, that will determine place of supply. And place of supply, this is determined as per section 10, 11, 12 and 13 of the IGST Act. Place of supply, right, that is defined, it is determined as per section 10, 11, 12 and 13 of the IGST Act. That way we cannot cover up today, so I'm just giving a reference. So location of supplier, that is a defined term. Place of supply we have to decide as per section 10, 11, 12, and 13 of the IGST. So the section 10 and 11 are in relation to goods, section 12 and 13 are in relation to services. So we have to determine the place of supply as per section 10, 11, 12, and 13 of the IGST Act. And we have to determine location of the supplier as per the definition. So if these are two places, location of the supplier and the place of supply, if these happen to be in two different states or two different union territories, or a state and union territory, then it will be treated as a supply of goods or services in the course of interstate trade or commerce. Now, what is the common mistake committed here? Students do write location of supplier and recipient in different states. Recipient need not be in another state. He may be in the same state, he may be in the same city, he may be in the same building. But the place of supply is another state. So these two words you have to be very careful that location of supplier and the place of supply, these are in two different states. Okay. Then subsection 2. This is supply of goods imported into territory of India. So this is what we talked about, that interstate supply includes import and export also. So subsection 2 of section 7 is clarifying supplying of goods imported into territory of India till the cross custom frontiers of India shall be treated to be a supply of goods in the course of interstate trade or commerce. So that will also be treated as the interstate. So there are no specific provisions on under GST for charging GST on import and export. This is already covered under the definition of interstate supply. Then supply or services or both. Now this is something different. This says even if it is within the same state, it can be treated as an interstate supply. Exception number E, where the supplier is located in India and the place of supply is outside India. That is clear. Number 2, this is to or by a special economic zone developer or a special economic zone unit. So suppose you are sitting in Mumbai, here from you are sending the goods to a special economic zone. A special economic zone is already situated in Maharashtra. Destination is within the same state. Still, it will be considered as interstate supply because a special economic zone has been given a different treatment, different understanding. So even if it is within the same state, still it will be treated as a interstate supply. Then number C is saying the taxable territory not being interstate supply not covered elsewhere in this section shall be treated as supply of goods in the course of interstate supply. So where any transaction which cannot be covered in intrastate, then that is bound to be considered as interstate. So if there is a confusion, and if you are sure that this is not intrastate, then the answer is already given under subsection 5 that this will be treated as interstate supply. So this is only a brief introduction what is referred as interstate supply. So why interstate supply? Because interstate supply is covered under the IGST Act. Tax is levied under IGST under section 5. When it will be levied? Answer is here. So where location of the supplier and the place of supply happen to be in two different states or two different union territories, or a state and union territory, then it should be treated as a supply in the course of interstate trade and commerce, and that includes import. And specifically, for subsection 5, that is a unit in SEZ and outside SEZ, even if they happen to be within the same state, still it will be treated as a interstate supply. Okay, sorry. So any questions now? Surinder?
No, sir. Absolutely clear, sir.
Any other person? Any?
Hello.
Yes,
Hello, sir.
please.
Location of the supplier and the place of supply will differ in bill to ship to movement. Is it, sir?
These are very much different. Location of supplier is a defined term. Place of supply is defined as determined as per section 10, 11, 12, and 13 of the IGST Act. Those are long sections. That's why I have not taken up in this lecture. Particularly section 12 and 13 in relation to services are really very, very big sections. So we have to determine the place of supply as per those provisions. Location of supplier, that is as per the definition. Definition says where the place is registered, then registered place. If the services are being given from place other than registered, then permanent location. So location of supplier, it is as per definition, and place of supply as per section 10, 11, 12, and 30. Anything else?
Sir,
Hmm.
special economic zones, there are duty-free warehousings are being given. So when duty-free is there, so how do we charge GST there?
Which duty free, which one?
Warehousing in special economic zones,
Hmm.
duty-free warehousing is given, or the duty-free sheds are given, like, whatever business you're doing, it is completely duty-free. So
Correct.
how to charge GST in that case? Because even GST is exempted.
Within SEZ, there is no GST. If you supply the goods from outside to GST area, or rather these SEZ units, then GST becomes chargeable. But if that person who's procuring the goods from you from outside the SEZ, if he is already registered as a star export house, do you know the concept of star export house?
Somewhat, not much.
So they have a right to establish warehouses and they can procure the goods without paying duty. So very specific case, not every SEZ unit can procure the goods without paying duty. So if they are exporter and if they have a status as export house, then they are authorized to establish a duty-free export, or rather duty-free warehouses. So they can procure the goods without paying duty, but only for export, not for any other purpose.
Acha, okay.
Okay,
Yeah, thank you.
welcome. Any other question?
Sir, I have one question.
Yes, please.
Sir, when you are referring to the provisions in this act, GST Act and other acts, you are referring to it as section. While you are referring to the Constitution, you are referring to it as article. I don't understand the idea behind this reference.
No, that difference is created by lawmakers themselves. That contents of articles that contents of the Constitution will be referred as the articles. No specific logic,
Okay.
right? So it is only the lawmakers themselves have done it that way.
Okay.
That the points in Constitution will be referred as articles, and under any other law, those will be referred as sections.
All right, sir. Thank you, sir.
Welcome. So we move ahead.
Yes, sir.
Okay. So now getting ahead, this is interstate supply. This is subject to provisions of section 10. So section 10, I've been telling again and again, section 10, 11, 12, 13, these determine place of supply. Supply of goods where the location of supplier and place of supply of goods are in the same state. Now compare that here. What is written here? Location of supply and place of supply are in two different states or two union territories or a state plus union territory. This is called interstate supply. And now read here what is given in subsection 1. Where the location of supplier and the place of supply are in the same state or same union territory, then that will be treated as intra-state supply. Goods may pass through another state, but where the destination is, if the destination happens to be in the same state, then it will be treated as intrastate supply. In Maharashtra, there are certain places where the goods will reach after crossing through Madhya Pradesh, MP. So goods touching another state is not important. Question is, where is the destination? So if the destination of the goods happen to be in the same state where the supplier is also located, then this will be considered as intrastate supply. Here we have some questions going on. Sorry. And almost some problem is there, so I'll not change it. So here the question is, Satish is writing section 8 of the CGST, right? Being interested, section 8 of IGST is given the heading. It is section 8 of IGST, it is not CGST. So coming again, so where the location of supplier and the place of supply happen to be within the same state, then this will be referred as intrastate supply. And again change the same provision regarding a special economic zone that is given, that provided the following supplies shall not be treated as intrastate supply because these are covered under the interstate supply. So if the goods are being supplied from SEZ to a place outside SEZ, it is an interstate supply. From outside the state to a SEZ unit, that is the interstate supply, that will not be considered as the intrastate supply. Same is under subsection 2. This says where the location of supply and the place of supply as per section 12 and 13 of the IGST Act happen to be in two different states, or in the rather in the same state, that will be treated as the intrastate supply. So question is, what is the location of supplier and what is the place of supply? Location of supplier and place of supply. These words you have to remember very, very carefully. See here. Location of the supplier and place of supply. These are important words. If these are in the same state, it is the intrastate supply, and if these happen to be in different states, it will become a interstate supply. Is it okay? Keep on answering me. So,
Yes, sir.
yeah, tell me. So again, going back to the basics of CGST, here we have talked about supply, interstate supply and intrastate supply. Point number 1, GST is a tax. Tax coming from, or tax is authorized by Constitution of India. And then it is further authorized by CGST Act and IGST Act. What is intrastate supply? That is as per section 7 of the IGST Act. What is intrastate supply? That is section 8 of the IGST Act. So intrastate supply is a supply of goods or services in which location of the supplier and place of supply are in two different states or union territories. Intrastate supply as per section 8 of the IGST, where the location of the supplier and place of supply is in the same state or union territory. Right? What is supply? That we are going to talk about later. Then supply should be of taxable goods and services. Not every supply is subject to tax. Being supply is one part, but supply should be of taxable goods and services. So what are goods? What are exempted goods? What are taxable goods? We are going to talk about. Same is about the services. What is the meaning of the word services? What are exempted supplies? And then what is taxable service? So unless a supply is of taxable goods and taxable service, tax cannot be charged. So charging tax is one part, but on what? Supply. Supply of what? Of the taxable goods and taxable services. So what is the meaning of taxable goods and taxable services? That I'm going to explain to you. Here, what is the meaning of the word goods? Goods means all types of movable property, but other than money and securities. Money and securities are neither considered goods nor considered as services. But including actionable claims, growing crops, grass and things attached to and forming part of the land which are agreed to be severed before supply or under a contract of supply. So this is a definition of goods, otherwise also referred, but here the distinction is other than money and securities. What is the meaning of the word money? Can somebody tell me what is money? Whether old currency which is not in use, that can also be considered as money or not?
Not
The world currency is a goods.
What currency is?
Goods.
No, I'm not clear.
The world currency is not the currency. It's as good as a goods actually. It is
Yes.
a
Outdated currency, which is not in use, which is not a legal tender for discharge of any liability, that will not be considered as money. Then that will be treated as goods. That can be sold and that can be bought and sold. Okay. Old currency that can be bought and sold. But current currency cannot be bought and sold. You can change that denomination. This color has come in. I did. So goods means
Sir, one
every
doubt,
kind.
sir.
Yeah. Tell me.
This old, you said old money can be bought and sold, but legally it is not allowed, no, sir. Specifically, they made
No, you are referring.
specifically they said that old currency notes you cannot possess after this demonetization.
Only these two currency notes which are demonetized, that is prohibited. But otherwise, any old currency, suppose you have a currency note which is 100 years old, right? You can possess any number of those notes, no prohibition. Prohibition is only for currency notes of 500 and 1000 rupees. Right? And that will also be removed after 2-3 years. Because when everything is settled, that will also be removed. So because then it will be valued as a paper only. It cannot be treated as the currency. So holding old currency notes, that is of 500 rupees and 1000 rupees, that is limited. It is not prohibited. You cannot hold more than 2 currency notes. You cannot hold more than 5 currency notes. So that is for the time being. But later on, that limit will also be removed. Suppose you have dollars. And dollars, which are the currency notes which were used 10 years before, not now. You can have any number of dollars, nobody is bothered. You can have 1 rupee currency note which is 100 years old. That 1 rupee currency note, today it can be sold for 1000 rupees. Then that will be treated as goods. It will not be considered as money. Imran, you had some question. You can ask me now.
No, sir. Clear.
So is this definition clear? That money, what is money?
I have a doubt.
Yes, please.
In intrastate supply, it was written that if we supply anything to foreigners, that won't be considered as intrastate supply.
That is an export.
But if suppose we have exhibitions in India and there are tourists over there, and if we supply it to them, so wouldn't that be considered as intrastate supply?
No, if you have proper documentation for the foreign tourist, then that can be exempted. If their proper documentation is not there, what kind of invoice you create, that makes a difference. So that will require documentary evidence. That
But the exhibition is supposed to be for everybody in general. So
unless there is a sufficient documentary evidence to establish that the customer is a foreign tourist, exemption is not available. Okay. So when we say foreign tourist, that's why you should have proper documentary evidences. So in big hotels, the foreigners do come, but they submit a photocopy of their passport, they submit a photocopy of their visa, then exemption is available.
in the case of casual taxable person, non-resident, those concepts, can you clarify related to that?
Certainly we'll talk about, certainly I'll explain. Right? So non-resident taxable person, he is a person making supplies in taxable territory but doesn't have a place of business in India.
Yes.
Non-resident taxable person. So he is a person from outside India making taxable supplies in India but not having a place of business in India. That is taxable territory. So he is referred as a non-resident taxable person. He also requires registration under GST, and that registration is valid for a limited period of time. Then Another concept that you asked is casual taxable person. So a registration under the GST is state-wise. So in every state, separate registration is required. So if a person is registered in one state and he is making supplies in another state and he doesn't have a place of business there, then he is required to have a temporary registration in that state as a casual taxable person. So this becomes relevant in exhibitions. So suppose you are based in Tamil Nadu and if you happen to come to Mumbai to participate in some exhibition, then for participation in exhibition, you don't need registration. If you want to have any transaction in the exhibition, then you will have to have registration in Maharashtra as a casual taxable person. So registration given to casual taxable person as well as non-resident taxable person, those are valid for a maximum period of 90 days unless they apply for another 90 days. So maximum possibility is 90 plus 90. Generally that extent, that validity is only 90 days. So those are casual taxable person and a non-resident taxable person. Is your question answered or I need to explain further?
Casual taxable person, I was talking related to that only. So if suppose I am a casual taxable person and I'm supplying it to any kinds of people, and suppose a tourist has come and he has taken goods from me, so that will be intrastate only, na? Like
that will be
intrastate only, right?
That will be intrastate supply.
So over there it was written that any supplies made to foreigners is not intrastate.
Agreed, but what is the evidence that he is a foreign tourist? If you have a documentary evidence, then it is accepted.
Okay.
Isn't it? How do you prove that he is a foreign tourist? What is the justification? If you can justify he is a foreign tourist, then exemption is available. If you cannot justify, then exemption is not available.
Okay. Thank you.
Imagine a situation that if the exemption is given to you generally, then you will explain that every customer is a foreign tourist for you. Isn't it?
Right, right.
So that's why if you have a documentary evidence, you can certainly claim the exemption. And that's why I give you example that on all the big hotels, when the tourist is coming and he's from outside India, he is required to submit a copy of the passport. He is also required to submit a copy of visa. And sometimes even travel documents also they are required to submit, because then only a hotel is going to get the exemption on that.
Okay. Thank you.
So the concept of goods, I was talking about money. So money is the current currency. Currency which is acceptable as a legal tender of discharge of liability as of now, that is money. Old currency coins, those are commonly sold. Even if you look at Amazon now, old currency coins, old currency note, those are being sold as goods on Amazon. So that is not money, that is goods, and that can be bought and sold. That is subject to GST. Then securities. Securities means what? What is called securities?
Shares.
These are instruments issued by bodies corporate for raising money. These can be shares, debentures, bonds, warrants, or any other. So these are not, you can invest in these securities, but those will not be treated as goods. Okay. And even that is also not considered as a service, but action in relation to these goods or rather money and securities, that is chargeable as a service. Money is neither goods nor service. Securities are neither goods nor service. But activities in relation to these two, those will be covered under the category of service and that will be chargeable. Now take example share broker. If you buy the shares worth rupees 1 lakh, on that brokerage is only rupees 25. So you pay GST on 25 or you pay GST on that 1 lakh?
Rupees 25.
On how much amount GST will be payable?
25, sir.
25 rupees only, because
On the brokerage.
that is on the brokerage, right? Because the securities themselves are not considered as goods. If those are considered as goods, then you have to pay the tax on that entire amount of 1 lakh. Right? So securities are not considered as goods. So therefore, there will be no tax on the value of securities. You will have to pay tax only on the value of service, that is called a brokerage. Okay. So this is what is the most important is the movable. So why there is no GST on immovable property? Why there is no tax on immovable property?
It's not covered under goods.
It's not a good nor a service.
Not a good. It's not covered in the definition of.
Yes, right. And when the property becomes immovable property,
Stamp
When
duty.
it is fixed to any land or building like that.
no.
When it is attached to the
Attached.
When a fixed structure becomes a movable property, when a completion certificate has been issued by competent authority, then only it becomes immovable property. Before that, it may be complete for 10 years, it may be complete for 25 years, but if the completion certificate is not there, it will still be considered as a service. It will not be treated as a movable property. Did you get it?
Okay, sir.
Take a note of this. Any civil structure becomes immovable property only when completion certificate has been issued by competent authority. How many of you are from Mumbai now?
I am.
Okay, so in Mumbai, you know, it is very common that the completion certificate is not issued by BMC, and the builder do not apply for that. So if they have not applied, even if building is complete for 5 years and you are buying that flat now, you will have to pay the tax on that, because the building is not complete as per law. Practically, it is standing there for 5 years. Building is complete. Okay, but he has not obtained completion certificate, or he has not been granted completion certificate. A transaction in that property will be subject to tax, right? But there are certain exemptions. On those exemptions I will discuss later on. But when a movable property, or rather when a fixed structure becomes a movable property, no, RERA is not into the picture as far as Maharashtra is concerned. Completion certificate is issued by only Mumbai Municipal Corporation. Okay. So that is about the goods. Then next is, what is the meaning of the term services?
Excuse me, sir.
Yes.
So could you please explain me what is actionable claim with some example?
Actionable claim is only a debt, only a right to claim money.
Example, can you give me in the real scenario?
Yes. Suppose I'm receiving, I've given a loan to somebody else, right? And I can sell that loan amount itself to some other person. So tomorrow he can claim all the money from my borrower.
Okay, but how do I charge GST on that?
No, it is not. It is not chargeable. It comes under the category of definition, but it is under exemption category. Being goods is one part, but taxability, that is another part. That is what we are talking about. We are going to the definition of taxable goods.
Okay.
So actionable claims are
not covered under GST, sir?
No, these are not. Even growing crops are not covered.
Okay. So
Any agro produce is not under GST.
So what exactly is that you told me actionable claim is exactly?
These are debts. Money claim, right to claim money.
Okay. So if I have sold goods to you, that becomes actionable.
If it is on credit, yes, it becomes actionable claim. I can sell that credit to somebody else, and so he can claim money from you.
Okay, sir. Fine.
There are agencies which keep on buying these kind of debts.
Something called discounting, something like that, sir?
Yes, discounting comes under this category. So then the person who is discounting your bill, they get all the rights of a supplier. Okay.
Okay.
So I was telling you, actionable claim, it comes under the definition of goods not chargeable to GST. Same is about the growing crops. Any agro produce, whether processed or unprocessed, as long as it retains the identity of an agro produce, it is not subject to GST. Here we talk about what is meaning of the goods. We are not talking about taxable goods. So first we are talking about goods, then further reduction, then further reduction. We'll come to the exact definition. What is the meaning of taxable goods? Because GST is chargeable only on supply of taxable goods, not all goods, only on supply of taxable goods. Is that clear?
Yes, sir.
GST is on supply of, add the words. What you will add? GST will is tax applicable on
Taxable goods.
supply of taxable goods,
Taxable
not
goods
supply
and
of
services.
right. So again, I'll take you to the old slide. Read it here. What is written here? GST is the tax levied and collected on interested and interested supply of
Taxable goods and
taxable
services.
goods and services. It is not on supply of goods and services. Okay. So here we just defined what is the meaning of the term goods. Now, from the goods, now we move to the services. What is the meaning of the term services? Services means anything other than goods, money, and securities. Any activity. So it is bound to be an activity. So anything other than goods, other than money, other than security, that will be referred as a service. Relating to the use of money or conversion by cash or by other mode from one form of currency another, etc., etc. So that is defined. In nutshell, anything other than goods, that comes under the category of service, but service does not include money and securities again. So what is called goods? Everything movable other than money and securities. What is service? Anything other than goods, but again excluding money and securities, then that is called service. So now you know what is called goods, what is called service, and therefore we move to what is exempted supply. So something being goods or service minus exempted supply, that will be called as a taxable supply. So exempted supply means supply of the goods or services of both which attract either nil rate or which are wholly exempt from tax. And exemption can be granted either under Section 11 of the CGST Act or under Section 6 of the IGST Act, and includes a non-taxable supply. So this is a very big definition, exempted supply. Very important definition for understanding. In exam, it is not so important, but it is very important for the purpose of understanding, because what it is saying, exempt supply means supply of any goods or services which attract either nil rate or which are fully exempted, and even non-taxable supply is also covered in the exempted supply. So three things are covered in exempt supply. Number one, non-taxable. Number two, nil rate. Number three, fully exempt. So three kinds of